Good afternoon and welcome to another installment of our Brownback session, Greystone Brownback Sessions. I'm Rafi, Chief Operating Officer of Greystone Investment Group.
My name is Jorge, CEO of Greystone Investment Group, Rafi.
And hey Jorge, where could you contact us?
They could always find us, Rafi, at homes the number 4 income.com. That is homes the number 4 income.com, where you invest.
And we do the rest.
That's right.
Very easy.
Let's do it.
Shout out to Stephanie, as always, back there in the production. Hey Stephanie.
Hi guys.
And we have a special guest back there. She's like tucked in. She doesn't want to. But our property manager, Jessica, is back there. Hi, Jessica.
Hi guys.
Woo!
There you go. Hey, new camera, new lighting. Let me see. Man, you look good. I mean,
I do.
you do?
You want me to tell you look good?
Of course.
Ain't gonna happen. Ain't gonna happen.
Oh, man. Dalia, please say I'm good. I think it warrants all this time we've been using the glasses just because we're not confident enough to show our beauty. I think this is time with this setup. Don't you think?
Let's do it.
Let's count down from 4, of course. So 4, 3, 2, 1. Ah! Wow! Look at that!
Wow.
Whew! Look at this. Look good?
You got some beautiful eyes. I never noticed that.
Watch
What
out.
to tell you.
Watch out! Watch out! Watch out! Watch out! Well, thank you very much for joining us. And yeah, we're back. We've been a couple of months very busy with clients, with new setup of the company. I'm going to Hong Kong next week to meet some clients over there. So I need to find out how to say hi in Mandarin, but they speak English. So we'll see you in Hong Kong the week of December 3rd. We'll be over there. And a bunch of things that have been happening. So a lot of people have asking, hey, when you coming back and all that kind of stuff. But I think the break was good for us, right?
Absolutely, absolutely. It was a good time to rethink, to strategize again, and we're back here.
Awesome. And today we have a very relevant topic because it's the end of the year. A couple of things that you should be doing, but one of them is, again, we're going to talk about the 4 reasons you must start investing in rentals in 2019. Again, 4 reasons why you must start investing in rentals in the 2019. So, Jorge, let's go with the first one. What will be the first reason we should start investing again? We should invest in 2019 in rentals.
Rafi, the main reason why people should start investing in real estate is because in 2019, and what we're saying here is that you need to start. And it's because the year is starting, what better time than to do it now? But the main reason is when it comes to rental income is the income you receive on a monthly basis.
Got it.
It's income that you receive regardless of what you do, as long as you have a good asset.
Mm-hmm.
And I think a lot of people should look into buying rental properties.
Well, and again, end of the year, so I'm sure you're going to sit down with your CPA because you have a CPA. They have, right? I'm sure if you're watching this video, you have a CPA as part of your team. You have to. So basically, you're going to do the end of year kind of, assessment, strategy, all that kind of stuff to see what you're going to do in 2019. Rentals has to be part of that equation. If you're investing in real estate, rental has to be part of the equation. We always suggest the 80-20, right? 80% rentals, 20%, flips. Rentals gives you the stability of the income. Flips more the high reward, higher risk. But again, you sat down with your CPA. You need to make sure that rentals are part of your strategy in 2019. That's very, very important. What will be the second reason why we should invest in rentals in the 2019?
Rafi, the second reason is the tax advantages you get from investing in real estate. Especially a lot of those that are either 1099 or even W-2s. And a lot of times you W-2s and there's things that you can write off.
And in LLC you can.
In an LLC you can. And it's just a beautiful thing. Examples of it is the interest rate you pay on the mortgage.
Mm-hmm.
Also, the depreciation you can take on the property. Each property you can take the depreciation for up to 27 years, Rafi.
Now, are you a CPA?
I'm not a CPA, no.
Am I a CPA?
I don't think so.
So these are suggestions, but consult with your CPA. We have a great CPA. Shout out to Bob Graham, best CPA in real estate in Tampa. But yeah, there's a couple of things that you need to think about. First, the laws were changed, the tax laws were changed. They're much more business friendly from this year for the next couple of years. You take advantage of that. The advantages in terms of tax rates and taxation rules for businesses are higher now than they were a couple of years ago. And again, like you said, interest rate. Let's talk about income. If you, for example, invest in something that gives you 8% income, there's not much you can do with that interest income. You most likely, most of it, you have to report it. Well, the same amount if you have a rental, you can deduct maintenance, you can deduct,
Absolutely.
that kind of stuff. That now maybe on this one you get $1,000 interest income on that one, but you have to report 1,000. Here you may get $1,000 rent, but you get to report 600.
Absolutely. I would say the same thing for stocks. I mean, for those of you guys that have been doing really good in the stock market, maybe now is the time to sell. We've seen some of the signals that the stock market is giving us, Rafi. I think it's a good time. It's like the best. I always say it's the best mutual fund, Rafi, because you could depreciate it. You could take a write-off on the interest. By the way, you could borrow to buy it, and then write off the interest.
You're gonna borrow off stocks.
Exactly.
You're gonna go. Most of us cannot go and say, "Hey, I have 10 Apple stocks. Can you give me $1,000?" But you can do that with rental.
Absolutely.
It's an asset that you can actually borrow from against that.
Absolutely, and it's an asset that it serves multiple purposes. You could rent, you could sell, you could live in it. So to us,
remember the flip over rents.
Yes,
That's flip over rents. That's a flip that you can say, "Hey, I'm sorry, rentable flips." It's the other way. Right. You see, we're rusty. It's been a while. Rentable flips. That's when you buy a flip, opportunity, but as part of your analysis, you say, "Hey, what if I don't sell it at the price that I'm looking for? Can I cover my expenses if I rent it?" Those are the beautiful rentable flips. That's the best flip opportunity you can have. Rentable flips. Hashtag rentable flips.
I want to talk about my own personal experience, Rafi. Nowadays, I'm very blessed. I own 12 properties right now. And it's been a bumpy ride, as it is for a lot of investors in year one.
2006, 2008.
And also, in the first years, you got to spend money on refixing the property and things that come up. But if you're patient enough and you have the right team, you start seeing what I'm seeing now, which is some of the, the income coming now, and I'm very happy.
Team.
Just the fact that, if I have a slow month because I'm in sales or something happened, I could count on that income coming to pass me through. So that's one of the things, the reasons I like rental.
Keyword in all you said was team.
Team.
If you have a team of title companies, so that they make sure that we just had an incident where we're buying a high-end flip, and if it's not for the title company giving us information as to who's the seller, we could have been in dire situation. But it's the team. It's the lawyer that set up your LLC. It's the CPA that makes sure that you set it up in a way that you take advantage of the taxes. It's the property manager that helps you make sure that the cost of the property they're kept in check, and that they have good tenants. Because one of the things that happens when you on that first year, if you inherit a tenant, the property manager basically didn't vet that tenant, right? So if she's strict on something, background checks and credit checks and all that kind of stuff, when you inherit a tenant, you may not have that, right? So that's why that first year it's a little bit tough, because if that tenant leaves, again, the expectations of that tenant are different than what you're setting, so the term may be a little bit higher. So you have to be patient. That first year is the one where you say, okay, I spent money here, but then after that, then you start seeing the benefits in terms of that. But the team is key.
Absolutely, and we have the team, Rafi. We have the team, and one of the things that I want to encourage you guys out there is to start investing. We have the team. You don't need to be a pro. You just need to know the right team, and we have it here.
Right connection.
For sure.
Now, what's the fourth reason why they must invest in rentals in 2019?
It's roughly like I was saying, increasing rents over time, giving yourself a raise over time. So
I like that.
It's one of those investments.
Are you giving a raise every year?
No.
No? Okay. I try, I ask.
But it's something where, when you buy stocks, you depend on the market, right? Almost with real estate, it's almost a given that the rents are going to go up in the next year. So you know that even if it's a little bit, you're going to give yourself a bump. Which is what I like about rental property.
And actually, we always suggest, we're not telling, hey, if you have $1,000 rent, to increase it to $1,500. That's you're gonna lose that tenant, right? But even if you know that the rental market is tight in that area, we always suggest that you bump up something. So if it's $1,000, bump it to $1,500. It's just $5. We just want that tenant to get used to the actual increase of rent every year. So maybe it's $5 this year, maybe 10 the next year, depending on the market. But you always want to at least increase $5, so again they get used to the rent increasing every year.
They prepare themselves. They know it's coming. And third, if you have to adjust your rents because the market now has changed and it's a good tenant, then you do it. You lower the rent back down again.
Well,
it's not going to hurt you.
And the thing is that if you wait, right now the past couple of years in Tampa, it's been a 3 to 5% appreciation on rents, right? Increase in rents. So that means that if you wait till 2020, you lose that 3 to 5% appreciation that you could have gotten. So instead of an 800 to 840, you're gonna start 840. You lose that $40 that you got there. And not only that, you push that year one, which is when the bigger investment is there. You push it 1 year. So it's like starting to invest now or in a year. Big difference. Time is your ally in this, so you want to start investing as soon as possible.
So, just like you mentioned before, having the right team is important. There's a lot of people that are pretty successful renting properties on their own, and there are some people out there that are so-so. And those people that are so-so, I would want to bet it's because they don't have the right management in place. You know, little things like this that might look like just miscellaneous stuff could really add up at the end. 4 or 5 years down the road, you're like, what happened here? Why is my asset doing so bad? It's because you don't. Those are things that you're not supposed to know unless you have a team.
Absolutely,
Very
absolutely.
important to have the right
and
team.
it's those three pieces. You have to make sure that you nail it in terms of the acquisition. You have to make sure that rehab is done to the market specifications. Because if you put, if you're in a, slum in Lakeland or something like that, and you put granite, and you put high-end stuff, you're not going to get, $1,000 because the market says 700, 750. So that rehab portion has to be, up to the market specifications. And let me tell you something. The big tip here, write it down. Are you okay? 3, 2, 1. Property management has to be part of that rehab design. They have to tell the rehab, the GC, hey, send me the quote because I need to make sure that I can rent this property with what they do, right? So, hey, you're going to put vinyl? No, that area is tile. So let's put tile. So the property manager, because you have a part of your team, has to be part of that design process in the rehab. Because at the end of the day, who's renting the property? The GC? No, it's the property manager. So that's something that we have seen in our company has worked very well.
And to me, that's all part of the psychology of the tenant. And this is a type of class that they don't teach in college. But the psychology of the tenant, because you understand that what the tenant is going to need as a bare minimum when it comes to, carpet or whatever the case might be. But at the same time, you want to make sure that you understand what the landlord wants to do. Obviously, they don't want to constantly have to repair things. So that's something that, you need to understand the tenant based on location, based on the type of property you're renting, obviously. Because if it's a property, let's say, in South Tampa versus a property in Ybor City, it's going to be a different type of psychology that the expectations that the tenant are going to have. So those are important things that if you're not aware, read on it and get more familiarized with it.
Excellent. So let's go over the 4 tips. Number one is sorry about that. Generating income. Generating income. Number 2.
Advantages on taxes.
Tax advantage is big. Number 3.
Increasing rents over time, giving yourself an increase.
And numero 4.
The availability of investing on something that you could borrow on and have a fixed liability, but at the same time have the potential of getting more profits from.
So the liability stays here, but the rent goes there. I'm a happy camper because now percentage-wise, that mortgage, it keeps getting lower and lower versus the payment.
I want to add something about that. The main reason people got in trouble in 2007 is because they missed that number 4. Making sure that they have a stable mortgage that was long enough to bypass any type of any type of issues with the market and stuff, recessions. That's what I meant. Very important that nowadays, and Rafi is a huge advocate of this, that you have a fixed mortgage with a minimum of 7 to 10 years.
7 to 10 years.
I can let you elaborate more.
7 to 10 years.
What is responsible lending? It's very important that
don't go over 80%.
80%.
Don't go over 80%. That gives you a 20% cushion in terms of if the market goes up and down.
Absolutely.
It's very hard for the market to go down more than 20%. It went more than 20 last time. But, that happens, every 20, 30 years, right? So you have that cushion that if it goes down, you still have, even if it goes down 25, you can ride that because you're kind of there,
Yeah.
So that's one thing. The other thing, like you said, make sure that it's fixed for at least 7 to 10 years so you can ride some of these variations in the market. Right now, the market is going up. We know at one point it's coming. Basically, I always say we're one day closer to the next bubble. Right?
That's right.
And we have started to see some of the signs. The lending has been more flexible than maybe 3-5 years ago. So we started to see some signs that you go, this is what happened back then.
Yeah.
I think the market is a little bit more structured. We have a little bit of a safety net that before we didn't have.
That's a good way to put it. I like it. I like that.
But
analogy.
still, you start to see some stuff that you go, here we go. Property staying in the market for 2-3 days instead of weeks, all that kind of stuff. But the lending part, it's key that again you have that 80-20, you have the 7 to 10, approach in terms of length, 7 to 10 years, and please make sure that you vet that lender. There's some people out there, they're giving you hard money and all that kind of stuff. I will always go with someone that you have either a good reference from an investor or that you've been able to research and go, this is a solid company that we can work with. We were like 2 years, right, before we actually started recommending a lender, financing, because we wanted to make sure that we had a couple of situations where, we were burnt. They promised something and then they didn't deliver, and that costs us money. So once we, vetted this company, we have done like 15, 20 transactions with them just this year. Then we said, okay, let's recommend it to our investors. So you have to be sure that you have that in that regards. Well, that's it for today. Join us again. We're going to do it. I'm going to be in Hong Kong next week. So do you think we can do a Facebook Live? Well, it's a 13-hour difference. But I think we can do the next one with Stephanie. What do you think? I think it's the most viewed video on YouTube.
And Jessica
in our
as well.
YouTube channel. So it can be Jessica and Stephanie, and we go from there.
Yeah.
You know what? If you want Jessica and Stephanie here next Friday, just make a comment and say, hey, we want Jessica and Stephanie, and depending on how many people comment that, we'll get them here. They're nervous right now. I hear the door opening because they don't want to do it. But if you comment and you say we want Jessica and Stephanie next Friday, we'll make it happen. Excellent. That's it for today.
I want to add something before we go.
Go ahead.
Guys, if you're looking at us in YouTube, I encourage you to do it now, to make the decision to start investing today. It's not rocket science. All you have to do is make the first step, and we will help you with the whole process. It's doable. A lot of investors started with no knowledge, and now they're doing very good. Don't forget to go to our investor profile, fill it out, and free consultation. We don't have a problem helping people and guiding them
Absolutely.
through the process.
And the easiest way to fail is not doing anything.
Not trying.
Not trying. So you have to go for it, and then along the way, make sure you have a team that can help you do your research, but don't have these paralysis analysis where you're stuck, looking for the perfect house, for the perfect process, all that kind of stuff. Get into it, and then find a partner like us that can guide you through it, but start and then go from there. Now, Jorge, where can they find us?
Rafi, they could always find us at homes4income.com. That is homes, that number 4income.com, where you invest.
We do the rest. Don't forget to subscribe to our YouTube channel. It's the same thing, right? You just YouTube and then search Homes for Income. You will see a little logo. You will see, is Stephanie's video the one highest rated?
Number 1, yeah.
I had to find that. Most likely.
And we answer all the questions, so you could I'm always keeping an eye on that.
Absolutely. And then again, when you go for Homes for Income, fill out the investor profile. Our team will contact you. And again, if you're watching this in December 2018, and you're in Hong Kong, we'll see you there.
That's right.
Excellent. Thanks again for joining us in the latest episode of Greystone Brownback Session. See you next Friday, or maybe see Stephanie next Friday and Jessica. We don't know. Thank you.
See you guys.